So good morning. It is April 9th, 2025, 8:12 in the morning. I'm Matt Pierce. And today we're going to be talking a little bit about the dichotomy of this OPEC thing and oil prices. Because if you're in the industry and you're in the ground level of this, right, you're questioning a lot of things right now because there's a real paradox, a real dichotomy going on here. And, here on this podcast and on this YouTube channel, this is not just about oil. It's not just about gas. It's not just about all these things, right? This is about the world that we live in and analyzing the news from a real practical sense. And there's some entertainment value, I hope, to it. So, but today we're going to be talking about oil again. And this is something that I know a little bit about. I mean, this is something, my background, my family's background is in oil and gas. Okay. I've been around this stuff since I was a kid. Okay. But also as an adult, I've covered a lot of oil stories, and obviously I work in the industry still today as a communications consultant in the industry. And this is posing a real questionable scenario because right now, even as OPEC is tightening its grip, right, they're looking at production falling and sanctions are ramping up on countries like Iran, right, Venezuela. Oil prices are still sliding. Okay, this morning at 8 o'clock in the morning, we're seeing oil at $56 a barrel. Okay, that's currently where oil is. This is unusual with production cuts from OPEC. It's really unusual. So the real question is here, what's going on, right? Who's cutting? Who's pumping? What does all this mean for the U.S. energy market, the global economy, and ultimately your wallet? What does this mean for all of this? It means a lot, actually. So I think we're going to start when I was kind of scripting the show this morning, and I was talking with some of my clients overnight, offshore clients, foreign clients, right? Overseas. And I think that we're looking at OPEC and this oil conglomerate, this cartel, if you will. Their production fell by 110,000 barrels a day in March. That puts OPEC production at around 26 million barrels per day. So I think we need to look at where this drop is coming from. Okay? That's coming from three key players: Venezuela, Iran, and Nigeria. Nigeria is a bit of the outlier, and we're going to talk a little bit about that. But Venezuela, Iran, and Nigeria, each one of them saw their output fall by like 50,000 barrels per day. Venezuela and Iran, their declines can be tied directly to renewed U.S. sanctions. Okay, Washington's effort to choke off oil revenues to governments that they view as hostile or destabilizing. Fair enough. That's a fair enough point. But like I said, Nigeria is a little bit different because that's a logistical problem. Okay, their shipments, heading to this Dangote refinery were lower than expected, far lower than expected. And that's where the twist kind of enters into this market, okay? Even with these cuts taking place, global oil prices are still tanking. You heard me right. Global oil prices are still tanking. WTI is still below $60 a barrel. And for context, that's the lowest that oil has been in over a year, and far below what many oil-producing countries need to balance their budgets. I'm going to let that sit there with you for a minute, okay? Let that hang tight. Now, I'm going to ask you the question, why? It's a fair question. Why? So traditionally, when OPEC cuts supply, right, oil prices go up, okay? It's just fact of the world. That's basic supply and demand. Less oil on the market, more competition to buy it, higher prices, right? It's common sense. But today's market is not behaving traditionally. And this has some people who are involved in trading and communications and logistics like I am. It has some of us looking kind of skeptical at this. And I think we're asking ourselves this morning, what's driving this? There's a few possibilities of what's driving this. First off, weak global demand, right? There are signs everywhere that economic activity in Europe and in parts of Asia is starting to cool down. There's no doubt about it. It's starting to cool down. Shipping rates are down, right? And China, the world's second largest economy, it still hasn't totally bounced back from COVID. It still hasn't. China is still struggling. And frankly, these Trump tariffs aren't going to help any. And that's not you can argue this, but that's not a terrible thing. If you're trying to force them into submission, right? I mean, it's a very masculine way of looking at things. And it's not wrong. China's economy has not bounced back. Now, on the flip side of this, non-OPEC production is rising, okay? U.S. shale producers and Brazilian producers, these offshore rigs, even Canadian tar sand producers, these players are now stepping in to fill the gap. The U.S., this is a fact, the U.S. is now producing more oil than at any point in its history. I did if you watch my TikTok over on Matt Pierce blog, you'll see that I think this is short-lived, very short-lived. You'll see this. But it's true that the U.S. is producing more oil than we ever have. Storage is going to be the issue. Mark my words, storage is going to be the issue. Go look at my TikTok. The third problem here is the market just doesn't trust OPEC. When I was having this conversation last night with one of my clients over in the UAE, this was a big topic of conversation. The U.S., the world market no longer trusts OPEC. And this is a PR problem, and it's a policy problem for OPEC. There's a growing sentiment amongst traders, and I am working trading every single day. There's a growing sentiment amongst traders and analysts that OPEC, when OPEC says that they're cutting, someone somewhere is cheating. It's that simple. Someone somewhere is cheating. There's also the possibility that oil production could just ramp up without much notice. And there's a lot of speculation in the market. Financial markets play a huge role in setting energy prices, right? And when traders think that prices are heading down, they start to sell. Pretty simple. The selling pressure pushes prices even lower. And frankly, that's kind of a self-fulfilling spiral, right? This whole thing just goes down and down and down and down and down. You've heard me say that oil and gas, energy in general, is a cylindrical business. So what does this mean for the U.S. market? Let's bring it home. What does all this mean for the U.S. market? We've talked about OPEC. We've talked a little bit about, what the problem is with OPEC and where this lies with Nigeria, Venezuela, and Iran. What this means in the short term is lower gasoline prices. If you're filling up your car this week, you might see prices ease a little bit, maybe, depending on where you're buying gas at. And I think that's welcome news for American consumers, especially American consumers who are still feeling the pinch from inflation. But I think there's also going to be a big flip side to that, right? Because even though prices are going to be lower at the pump, many U.S. shale producers rely on prices above $60 to $65 a barrel to remain profitable. Below that threshold, we could see drilling slowdowns. We could see layoffs in oil-producing regions. We could see pressure on smaller, debt-heavy producers to merge, or maybe even some of them go under, right? So while consumers might win at the pump, the domestic energy strategy is sending signals to the market that there's a lot of turbulence ahead. And you and I both know, if you've been around this business a while, markets don't like turbulence. They don't like disruption. They like stability. Hence, one of the biggest problems in energy today, whether it's renewables or whether it's fossil fuels or whatever it is, there's just no stability. And I think there's another layer to this onion here, and that's energy transition. Cheaper oil could slow momentum behind renewable energy for sure. Think about this. And I'm not a huge proponent of renewable energy right now. I'm just not. But think about this. If gasoline is affordable again, some consumers out there are going to delay buying electric car, and some companies are probably going to postpone switching to greener alternatives. We're already seeing this. Okay, some companies are saying, you know what, we're laying off the EV market, and for good reason. For good reason. The real focus is on hybrid technology, and that's another conversation for another day. But I think what this is it's a reminder. The economics of energy transition are still very closely related to fossil fuel prices. When oil is cheap, the urgency to change fades. It goes away. So this is something you're going to have to look at, okay? Seriously, this is something you're going to have to look at. But I think now we're going to enter the conversation of politics and power, because politics and power plays a huge part in this, okay? Last week, the U.S. Energy Secretary, she went to Saudi Arabia and the UAE, right? Okay. And these are two of the world's most important oil producers. There were some closed door meetings. I've talked to people who were in those meetings, and those meetings focused on one thing: stability. They focused on stability. Washington wants to avoid a spike in oil prices because that could stoke inflation, and that's going to hurt consumers all the way around. That's going to hurt consumers. But at the same time Washington wants this, they're imposing sanctions on Iran and Venezuela, countries that could otherwise add millions of barrels a day to the market. So what Washington is doing here is you've got an amateur playing a balancing act. Okay, you have a guy who really the overall industry confidence in is, you know. The U.S. is trying to walk a very fine line. Punish your adversaries, keep prices stable, and support domestic producers without inflaming the global economy. Good in luck with that. Yeah. Yeah. Good luck with that. So and I've said this a million times. When it comes to energy markets, Trump was touting his beautiful clean coal yesterday, right? Okay. The guy is a fucking lunatic. Okay? He just is. He's a lunatic. He's an actor, kind of like Reagan. He's an actor. He talks a good game, but that's about where it stops. If you peel back the layers of the onion, he really doesn't know jack. And that's the truth. And the problem is you have a bunch of these regulators still, I'm just going to talk straight with you. They're still sucking him off, trying to make him feel good and stroking his ego, but they really have no clue what he's doing. They're kind of like, it's a love-hate relationship, right? It's kind of like dealing with your ex-wife or something, really. I mean, just point blank. So where do we go from here? There's a lot of uncertainty. A lot. There's a lot of uncertainty in the oil and gas market, but there's a few things to watch. Will oil prices stay low, or is this just a temporary dip? I think because of storage concerns, oil prices are going to stay low. Oil prices will that's my take on this. The next question that you're looking at here is how will shale producers here in the U.S. respond if the market stays under 60 for a prolonged period of time? That's a legitimate question. I think also you're asking yourself this morning, and I know my clients overnight were asking themselves this question when I was talking with them. Could tensions between Iran and Venezuela, should this escalate, right? Will this begin pushing prices higher again? We're kind of in some uncharted territory with this. We really are. So I think also you should be watching the Federal Reserve here in the U.S., right? Lower oil prices could very well bring down inflation a lot faster than expected. And that could influence interest rate decisions. That's another component to this that we're going to have to watch. So I think the bottom line is the energy market, the oil market is sending some very mixed signals right now. It's a very dichotomous situation. And what happens is that this isn't oftentimes a prelude to a very, very, very big change. A very big change. It's an extremely big change. And this is something that most of us are going to have to look at for sure, without a doubt. Yeah. All right. Good morning. It is 8:34, April 9th, 2025. I'm Matt Pierce. This is a podcast where we're unpacking the forces shaping our global world, one headline, one conversation, one idea at a time. And in the last segment, we were talking about this very dichotomy that we're seeing in the oil markets here today. And we're still going to dive into this because I think this is something that most people are pretty interested in because they're even passively, right? Even if you're not in the oil game, people are still somewhat interested in this. And in this segment today, we're going to talk a little bit about OPEC, right? Because I think this is a word, an organization, a term, an acronym, whatever, that you hear thrown around a lot. But I think very few people actually understand what OPEC is and how it affects the market, right? So we're going to dive in a little bit in this segment to OPEC because you've probably heard this mentioned quite a bit, especially when gas prices spike or when they fall or, when global tensions flare, whatever the case may be. So we're going to sit here. We're going to have, for those of you watching online here, how you doing? So we're going to sit here and we're going to have a cup of coffee and we're going to talk about what OPEC really is. And so you're going to hear things in the coming days, how OPEC is cutting production or OPEC's influence is fading, right? All this stuff. But what exactly is OPEC? Who is it? Well, how does it affect your pocketbook? How does it affect all of this? Well, as an oil, it's basically a group of oil producing nations that shape your energy bill, right? And it shapes the global economy and international politics. It has its hand in a lot of things. OPEC is not a small group anymore. Okay. It's just not. So for a lot of people who don't know, OPEC, to kind of give you some history here, OPEC stands for the Organization of Petroleum Exporting Countries. This is you've heard it called a cartel. You've heard it called different things. It's an intergovernmental organization. It's a partnership amongst governments, basically a group of countries that work together to coordinate oil production. And in theory, their role was to stabilize the oil market. I mean, in theory. And so you hear it referred to as a cartel. Of course it is. Yeah, that's the actual term that's used for this, the oil cartel. Because it's a group of oil producing nations who agree on how much oil to produce and to put into the market. And with the global situation, the goal of the cartel is to keep oil prices high within a certain range so everybody makes some money. We first saw OPEC come onto the scene in 1960, and there was 5 original members: Iran, Iraq, Kuwait, Saudi, of course, and Venezuela. These were the 5 founding members of OPEC. And the reason they created OPEC was because they were frustrated. Because Western oil companies, mostly in the U.S. and in Europe, right, they controlled the price of oil. They controlled a big chunk of the profits. They controlled most of this. So OPEC was born as a way for these countries to assert control over their own natural resource, right? Now, since then, over time, fast forward to 2025, OPEC has changed. It's grown. Today, it's expanded from those little 5 countries: Iran, Iraq, Kuwait, Saudi, Venezuela, to 13 countries now. And these are countries mainly from the Middle East, Africa, South America, things like that. But do you know how OPEC really works? Do you really know? I think most people have no clue. Most people have no clue how OPEC really works. OPEC, and I work in communications and trading. I make no secret about it that, I'm a communications consultant for a lot of these oil companies. And I help them strategize communications, right? Whether it's internal, external, whatever, governmental, regulatory, whatever. OPEC is a huge part of what I do. But the biggest thing, the basic idea behind OPEC is that they meet fairly regularly and they're going to discuss how each member should produce oil. So if prices are too low, then they can cut production to reduce supply, and this could push prices up. If prices are too high, or if they're worried about losing market share, they can increase their production, right? But it's not always that simple. That sounds pretty simple, but it's not always that simple, okay? Because each country has its own economic needs, you see? So some of these countries depend very heavily on oil revenue to fund government programs or to pay foreign debts. Other countries, let's enter Saudi Arabia into the conversation. Saudi has large reserves and they can afford to play the long game, where some of the smaller players, like Venezuela nowadays, they can't afford to play the long game. They're constantly having to play the short game. So reaching a consensus about OPEC isn't always easy. And there's often look, if you're in this world, you know that there's a lot of behind the scenes cheating going on. Some countries are producing more than what they agreed to. Others are intentionally producing less, so on and so forth, right? You know that this is if you're in this world, you know just how shady this world can be, okay? But if you've heard of OPEC Plus, this is a fairly new term, OPEC Plus. This was the broader coalition that was formed in 2016 that includes non-OPEC producing nations, notably Russia. Notably Russia. That's a massive amount of influence. That's a huge, massive amount of influence. So I want you to think of this like expanding your chessboard, right? OPEC by itself had a lot of power. But with Russia and other countries in the mix, now they're able to steer the global market in bigger ways. Maybe not as much as they would like, but they can still influence the global market in a lot bigger ways. Now, here's the question. Why should you care? And I think that's a legitimate question. Even in this age of renewables, electric vehicles, climate action, all of this pie in the sky BS that we hear, oil still powers the global economy. 100%. Think about this. Planes, trucks, ships, plastics, heating, industrial processes. Think about all of this. You name it. Oil is not just about the damn gas station. It's about global logistics. It's about consumer goods. It's about economic stability. Oil has a key player in every freaking thing that you touch. So when OPEC decides to cut or to boost production, it can change gas prices at the pump. It can influence interest rates and inflation rates. And it can shift the balance of global power pretty easily. I'll give you an example. 1973. There was this oil embargo, right? So this is when OPEC's Arab members stopped shipping oil to countries that were supporting Israel during the Yom Kippur War. Think Jimmy Carter, think, Nixon, think of the 70s, right? A few years before I came along, but think of the 70s. That caused a lot of fuel shortages, right? There were long lines at the gas stations. There was an economic crisis in the West. There was a lot of instability. We're going to go back to this point that I made in a previous segment. Markets like stability. They don't like all this back and forth bullshit that's going on. More recently in history, during COVID, OPEC Plus agreed to record production cuts. They were going to do this to stabilize the market. Now, that helped prop up prices and keep some oil companies afloat. The more debt-heavy oil companies paid a price. There were some layoffs. Simple as that. So now I'm going to ask you this question. Is OPEC losing its grip? That's a question that a lot of people are asking today. They're waking up this morning. They're seeing oil at $56 a barrel. Nobody's really sure why. They're asking, is OPEC losing its grip? Is OPEC still as powerful today as it once was? The answer is yes and no. Okay. Okay. The answer is yes and no. The U.S. is now the largest oil producer in the world, no doubt about it, thanks to shale. Countries like Canada, Brazil, Norway, they're also really major players. Storage, if you watch my TikTok and watch my YouTube, storage is a big problem here. But with this global kind of push, especially in Europe and Asia, towards renewable energy, the long-term demand for oil is kind of expected to plateau, and eventually it'll probably decline. Eventually. I don't think we're going to get there anytime in the next 20 years. I don't care what these climate change activists say. But don't get me wrong, that's not totally good news for you folks in the oil patch. Okay? Eventually, this thing will decline, like with everything else. Time marches on, right? But there's a lot of, let's go back to the conversation here to reel me back in a little bit. Let's go back to the conversation about OPEC members. There's a lot of division, a lot of turmoil, and there's a lot of complexity dealing with OPEC Plus. And this makes it harder for this cartel to act in unison, to act together, right? It does. That said, oil is going to be a key pillar of the global economy. And OPEC's voice, whether you like it or not, whether you most people out there working in the patch, most of your people working on the ground, boots on the ground, they hear OPEC and they just kind of look at this from a surface level, because that's what people do. They look at this from a surface level. And they're trying to understand very complicated things that they just don't understand. The truth is, OPEC's voice is still going to matter. How much does it matter? It's probably going to matter less now than it ever did. So I think the next time you hear something big about OPEC, you're going to have to keep it in context. You're going to have to know this. It's not just a group of oil ministers sitting around a table. This is a decades-old power structure that has shaped wars, it shaped economies, it shaped everyday prices, it shaped a lot. And while OPEC still has its grip on things, its grip may not be as strong as what it once was, right? Because it's at this intersection of energy, geopolitics, and economics, right? And that's an interesting place for OPEC to be right now. That's a really interesting place. So I think as we wrap up today, I want to leave you with a final thought on all of this. We've talked about this dichotomy in the oil production. We've talked about the supply chain a little bit. We've talked about who OPEC is. Now you know a little bit more about it. But I want to leave you with this final thought. Okay? Let's talk about this. Oil has always been more than just a commodity. It has. Oil has always been more than a commodity. Oil is a mirror. And this mirror reflects the state of our world. Politics, our economics, our ambitions, our anxieties. Okay? Right now, April 9th, 2025 at 8:40 in the morning, that mirror is showing us a lot of uncertainty, but it's also showing us a lot of opportunity. And that's what we're going to keep watching here on the Matt Pierce Blog Podcast, because there's a lot to unpack. Hey, I want to thank you. Thanks for listening to me this morning. Thanks for tuning in. I'm Matt Pierce. If you found today's episode incredibly helpful, I'd like you to consider subscribing, sharing it with your friend, leaving a review, subscribing. If you want to advertise, I've got cheap advertising rates. I'm not a big money guy. Okay? Throw your name in the hat. Reach out to me. And as always, stay curious. I want you to stay curious. This is where a real guy comes to talk to you about really complicated things and try to explain it the best possible way that I know how. So, anyway, all right, guys, take care. Stay vigilant, stay focused, stay curious, and we'll see you in the next one.